So that means that if you draw back 16, that means you're pocketing 14, 15, right? So wouldn't it be fair to say that it makes more sense to try, instead of trying to figure out how to be the big dog on the block and get your Cadillac Escalade or your Chrysler 300 that looked like a Phantom because you couldn't afford a Phantom, instead of getting that and putting it on 32s and putting a lift kit on it, and now you got to pay for brakes, you got to pay for rotors, you got to pay for the white wall rubber band thin tires, the run flats, where you spending $500 a tire for 4 tires, and the tires only gonna get you 200 miles. Can't hit a pothole because now you got to get your new rim. Instead of doing that, you could have just took the last 30 minutes of advice that I gave you and built yourself up a business. And the fact is that particular type of model works in every country. So I mean, the only difference is the laws behind who can control the property. Because in Japan, you can do this exact same model in Japan, but in places like the Philippines, somebody else has to have majority share of the property. But the difference is that you're still going to get money from it. Even if out of that 16 grand, if you're going to split that 16 grand 3 ways, you still getting 3 grand, 4 grand after all the bills is paid. Because I told you what, $12,000, $13,000 you get to keep out of the 16 grand, and everything else goes towards all the debt. Well, if you're getting like 12, 13 grand, and you say, well, I'm gonna take 4, and y'all can split the rest. Ain't nobody bitching. But you're getting 4 grand out the Philippines, you're getting 4 grand out Japan, you're getting 4 grand from America a month. That's 12 grand worldwide, international sales. And it's a residual capital. It's something that you can replicate it to expand on the quantity of income that you're getting, but you don't have to replicate the exact same transaction over and over and over again. You don't have to continue to flip houses to make money every month. You just have to continue to own houses so that you can increase the quantity of revenue that you're getting every month. But you could take the revenue that you don't need on your own personal expenses and put it into stocks, bonds, and mutualities, where that money can replicate itself every month, every year. And then whenever you want to do something expensive, instead of you taking the money out of your own pocket and going and buy some shit, you can actually get a cash flow against the value of your assets. And then that cash flow will give you the ability to buy something cash up front. Have you ever bought a car cash up front? A brand new car cash up front? No money down, no monthly payments. I want that one, and just hand them 60 grand and walk away. That's when you crossed over. I've done it twice in 1 year, and I can tell you, it feels good to walk on a dealership, especially with such a good tan, to walk on a dealership and tell them, I want that one. Oh, let's test drive it. I'll test drive it after I pay for it. I want that one. I don't care. I want that one. That's it. I don't want to negotiate. I want that one. I'm not even trying to reduce the price. I want that one. That conversation took me 15 minutes, and I drove off with a brand new car.